Hey, what's up everybody? Tuesday, June 2nd. All right. By the time this video goes up, we will have the API oil inventories. Oil sold off today. And I will go on record to say that the sell-off is a buying opportunity. As you know, over the weekend, OPEC agreed on a 9-month extension to the current output cuts that is bullish. In the last EIA report, the weekly report that comes out every Wednesday last week, I mean, all of the metrics in there were bullish. And one of the I think one piece of information that was the most stunning, at least for me, oil exports, U.S. oil exports, 3.7 million, almost 4 million barrels a day. Now you have to understand, just a few years ago, it was like zero. So while the market on Friday sold off sharply near the end of the day because these figures were released showing that U.S. domestic oil production at 12 million barrels a day, an all-time record high, they sold the market down. But they don't understand that we're exporting nearly 4 million barrels a day, whereas a few years ago it was zero. And it's only going to continue to go up. And not only that, in that report, you had strong numbers on refiner inputs. That's refinery demand for crude, back above 17 million barrels a day. That had been depressed for most of this year due to extended maintenance. That's finally getting back to where it should be. Gasoline demand was strong. Distillate demand is rising. You had almost a 13 million barrel draw in crude in last week. So you had everything in there. Imports, crude imports staying very, very low. So the numbers are good. So I am going out on record. Now, I don't think I'm even going out on a limb. I think this is an easy forecast that this sell-off, this is probably skittish speculators. When they heard the news about the OPEC deal and it didn't run up immediately, right? Because everybody thinks, oh, there's a headline, I'm going to jump on it. And it didn't work. So now they're selling out. Oil commercials, if you look at the open interest figures, the CFTC's Commitment of Traders report, commercials in oil, they are net long the market. And that's a rarity. You usually don't see that. A nice rally at the end of the day in stock market. Look, the stock market, and I said this the other day, I actually flipped around on my view. I've been saying that because of the reserve flows, which I talk about all the time, we are in the window of a market correction. But since we got that truce, that trade truce between the U.S. and China, I feel, and I think it's playing out this way, that it is now sending a signal to all these people who have been neutral, no opinion on the market, sitting on the sidelines. They're now coming in to buy because they're saying, hey, the trade outlook looks a lot better right now. So in this period where we should be seeing a sell-off based on that weak technical monetary condition, remember I called it that, we're actually seeing the market creep higher. That's very bullish because as we get towards later in the month and in August, you have three things coming together big time, big time, to create a very bullish scenario. I want to switch gears a little bit and talk about something else. I was listening to a podcast, a Wall Street Journal podcast. Actually, it was a headline that I saw. I clicked on the headline. It took me to a podcast. I thought it was fascinating. Now, let me just say, I do not read the Wall Street Journal. I probably stopped reading it about 25 years ago. As far as I'm concerned, it is a rag sheet. It is ideologically, positioned in its thoughts, in its editorial content, in its economics. It's wrong. So everything in there for me is kind of like useless information because I'm a macro guy. I like to look at the big picture. And if you get the economics wrong, for me, The rest of the stuff is useless. All right? But anyway, I clicked on it because the headline says here are the 3 things that can cause the next recession. All right, everybody's looking for the next recession. And you know, I went out on a limb and I said there's not going to be a recession because everybody is missing the big picture. And I'll get into that in a second. But anyway, so I wanted to see what are their 3 things. And it was an article, or I guess a conversation by one of their head reporters, this guy John Hilsenrath. He's been there about 22 years at the Journal. He's the guy supposedly who the Fed feeds information to before the fact. All right, that's what I've heard anyway. So this John Hilsenrath, he's like saying, so they're interviewing this guy, and first of all, I just want to set the stage because when the conversation begins, they start out by saying, this is going to be the longest expansion on record we have never seen. So they're completely incredulous that this has gone on for so long. Like they are beside themselves in trying to understand, hey, what happened to the business cycle, right? So it starts off like that already with a tone like, this is too much to believe. This is going to be the longest expansion on record. What the heck is going on? So anyway, they get into it, and he has 3 things that says, and he kind of goes back. He said, over history, whatever. These are the things that cause recession. Right? I'm listening. I'm on pins and needles. I'm listening with all ears. He says, number 1, we can have a period of excess. He calls it excess. And I guess he's trying to equate it to the housing boom. But what, you know, then I'm kind of laughing. I'm like, what is excess? That we consume too much? That we have too much real wealth that we have? That's excess, all right? So excess is one thing, all right? That's kind of a nebulous concept. And to me, it's kind of, I want excess, sorry. I want nice things. Nice homes, nice cars, good food, good clothes, leisure time. I want excess. Most people want excess, which defines their standard of living. Anyway, he says the number 1, the first thing would be a period of excess. All right? The next thing he says is an oil spike. Now, that could be true. I mean, if we have something happen and oil runs up again to $150, that could really put a crunch on consumption. But don't forget, the United States now is the largest oil producing country in the world. So it creates a lot of wealth for one sector of the economy, which is the energy sector, the oil producing sector. So that might not be a very large sector, but it's debatable whether or not that would cause a recession. But let's say that that's something we can go with. And then the third thing he says is the Fed. If the Fed goes, I guess, too high on rates, right? If it goes too far, I think he says. Now, no, and again, I would argue that because, again, interest rates, the government is a net payer of interest. When rates rise, what happens? It flows to the income of the non-government. We see this very, very clearly. And the non-government is a net creditor, right? We own 22 trillion of treasuries, right? How are you going to pay it back? We all supposedly are on the hook. The government has to pay us back. So the non-government is a net creditor. Interest rates go up. It flows on balance to the non-government as income via that interest channel. But here's the thing he left out. There was no mention in there whatsoever of the fiscal, right? No mention of, well, here's another way we can go into a recession. The government tries to balance the budget. We have draconian spending cuts, massive spending cuts to Social Security, Medicare, Medicaid, the military, and everything else. No mention of that. So this is very telling, all right? When you see something like this, and number 1, they're all beside themselves, not understanding how we have not, by the way, no mention of the fact that Social Security now is expanding at a rate of over 5.5% annually, and that's going to continue to go up as the baby boomer generation retires. I mean, just the rolls of recipients of Social Security and Medicare and Medicaid And you're talking there over $2 trillion out of the $4.8 trillion of government spending is in those programs which are non-discretionary. They get paid no matter what. But this guy never even thinks about the fiscal. By the way, if you go back to the Clinton era, when he balanced the budget, which everybody thought was a wonderful idea at that time, it threw us into a deep recession, which we are still kind of struggling with to this day. Income's never really recovered from that. So no mention of that. So for me, in listening to this, and frankly I wasn't shocked, and I have to tell you honestly, that was the reason I went to this article, because I was thinking to myself, are they going to say this? Are they going to talk about this? And sure enough, and I was certain that they would not mention this, and sure enough, he did not a word about the fiscal, which is enormous, all right? The government spending almost $5 trillion a year. That flows to income in every sector of the economy. Every sector of the economy. No mention of it whatsoever. So to me it says these people are totally looking out in the wrong direction. They're looking out over here for something that is very nebulous to them, like excess, right? They have no idea what they're talking about. The biggest supports to the economy and the reason we haven't gone into a recession has been exactly the spending, and it's coming from the spending on basically 4 things: Social Security, Medicare, Medicaid, and military and defense, which is not non-discretionary. It's discretionary, but it's treated like a non-discretionary expenditure. And all that stuff's going to continue. And that's why, unless they decide to make massive cuts, we are not going into